Welcome back, members. The next session is Advanced Pricing Agreements, GCC Structuring Intercompany Transactions at the time of setup of operations, for which we have CA Umesh Rao. I request CACP Jain, Managing Committee Member of Bangalore branch, to escort him onto the dais. And welcome him with the floral bouquet. CA Umesh has been practicing Indian transfer pricing for close to 18 years and has worked with multinational enterprises in setting transfer prices for their various intercompany transactions, transfer pricing audits, litigation, and advanced pricing agreements, and mutual agreement procedures. Umesh has focused primarily on clientele in consumer business and energy, resources, and industrial sectors. Apart from that, Umesh has worked extensively with technology and pharmaceutical companies. With this brief introduction, over to you, sir.
Hope I'm audible to everyone. Okay, thank you for the introduction, and thanks for having me here. So we will just talk about advanced pricing agreements and transfer pricing in GCCs. But my friend Lalit talked about all the controversies that can happen in transfer pricing. He talked about receivables, intra-group services, royalty transactions that could be questioned by the tax officers, right? So it's a bit scary when you look at how the transfer pricing subject, which is so fact-based, can be interpreted in so many ways, and there are always ways for the TPOs to really look at how this transfer price, which we would have concluded as at arm's length in our TP documentation, is not really at arm's length, right? So, but is there a way to come out of all this litigation? Otherwise, do we have to continue to have this what we call as tax harassment, right? So, advanced pricing agreement in a way comes into rescue, so to say. So, if you look at the transfer pricing journey of a company, this is how it looks like, right? So you start with the TP documentation that every year you have to maintain, by 31st October, which is, as most of you who are practicing transfer pricing as a subject may be aware that by 31st we have to have the accountant's report filed, and then we also have to have the TP documentation prepared and kept ready. That happens 31st October, say in 2024. TP audit happens, say, in 2 years' time, or if you look at the financial year, maybe 2.5 years' time from today, when the transfer pricing officer looks at your document and says that whether the transfer price that you have followed in today, whether it is at arm's length or not, right? So, of course, by now you know that transfer pricing officer has an advantage of hindsight. He can look at he has the availability of data which probably would not have been available for you at that point in time, and then now he can present it to you and say that the transfer pricing that you have followed is not at arm's length. Transfer pricing audit happens. More often than not, transfer pricing that you have followed is likely to be adjusted by the TPO. Then it goes into the tax officer has two options to him. One, either he can go to a dispute resolution panel, which against the draft assessment order he can go to, or he can go to a commissioner appeals route once he obtains the final assessment order. The advantage of DRP is the assessment is still continuing, right? So therefore, the demand is not yet crystallized. So you kind of get an extension of another 9 months to 1 year for the demand to be paid. So therefore, that's kind of a reprieve for the taxpayers. Whereas for commissioner appeals, if you have to go, then you have to get the final assessment order from the authorities. That essentially means the demand is crystallized and then you have to pay like 20% demand which is there, and then you can go for appeals. Assuming that even there, if you don't get a resolution, then you have to go to a tax tribunal, which is in a way a final fact-finding authority and kind of final forum for tax for transfer pricing matters. But the legal issues can then travel to High Court and then Supreme Court. Overall, if you look at, it's like a 13 plus years of journey for transfer pricing, right? So that's too much for any business to really bear it. I mean, you have an uncertainty on transfer price for 13 years. You don't know whether what you are doing is right or not. I think that's too much of an uncertainty. Now, what India did is way back in 2012, it introduced advanced pricing agreements, kind of helped the multinational enterprises and those who are having international transactions to upfront go to the go to the authorities and agree on the transfer price and get certainty. Now, just imagine the 13 years of journey that you have to do. If you can solve it in maybe 2 or 3 years or maybe 4 years with the APA, I think most of you would probably want that route to be taken, right? So, so what we can do is I'll just quickly run you through this advanced pricing agreement. What is it about? Because Lalit has spoken too much about tax controversy. Let's just add or give a ray of hope for the taxpayers and tax practitioners on how probably you can come out of it through advanced pricing agreements. Then we talk about how the GCC, which is kind of a buzzword nowadays, how APA perhaps can be a solution for some of the activities that are performed in the GCC, right? So a brief overview of advanced pricing agreement. Well, before I go there, how many of you have like done APA, have filed an advanced pricing agreement? If you can just raise your hands. Okay. So I'll just go as much in detail as possible, but feel free to ask any questions that you may have. So in India, the advanced pricing agreement was introduced in 2012. That's roughly after 10 years of introduction of transfer pricing provisions. It provides for a unilateral APA, bilateral APA, and a multilateral APA. Now, what do they mean, right? So unilateral APA is the one where you go to the tax authorities, that's essentially the CBDT, and then enter into an agreement with the CBDT saying that, look, this is the transfer price that I follow for my transactions. Let's sit across the table, let's discuss this case, and let's agree on the arm's length price that one should apply for this international transaction. Plain vanilla, very simple, unilateral, you and the central government, right? Second one is bilateral. Now, any transaction has two parties, and if it is an international transaction, it's India and say some other entity, for the example sake, let's say entity in the US. So you have two parties. If you agree a price with, say, central government of India, that price will also have a bearing on the other party to this transaction, right? Say, for example, in the US, say, let's take a software service case. India is providing a software services to, say, US, and US is paying India a particular remuneration, let's say 100. Tomorrow, the Indian government, once they enter into a unilateral APA, they say that, look, 100 is not the right transfer price. You should have ideally get 110. So this extra 10 has to come from the US. So your transaction, your agreement with the government of India also has a bearing for the other entity which is in the US. So how to solve this issue, right? So because if you are paying 10 more and he's continued to pay 100, then how do we, and Indian government will continue to ask for that 10 additionally, and he will not get additional 10 deduction in US, otherwise he would have got it, right? So how will you solve that? That's where the bilateral APA comes in. Now here the parties are you, Indian government, US government, and the US counterparty that you have. Bit complex than what we have in the unilateral APA. So, but there are, in a way, two parties are involved, if I take US and India. So two parties are come together agreeing on the price. Multilateral APA, So far, in my experience in transfer pricing, I have not seen multilateral API happening. In very advanced jurisdictions, it happens, is what I have heard, but very rare case where multiple countries are involved. So as we speak, we are looking at one APA, which could be a multilateral APA, but we have to explore that. Here, just imagine US, assume that there is also another transaction with UK. So you have another transaction with UK, on the similar arrangement. So too many countries, too many parties are involved, too complex to really agree on these cases. So, but that just gives you a flavor of what unilateral, bilateral, and multilateral APAs are. How does this APA process works? There is something called pre-filing. As we have written it here, it's optional. It used to be mandatory when it was introduced way back in 2012, but subsequently it was made more like optional to the taxpayers. Now, what is pre-filing? So essentially, in pre-filing meeting, the taxpayer goes to the authorities and have a discussion with them on, look, this is the transaction that I want to enter into an APA for. Now, tell me what your thoughts are on this. It's more like an informal discussion that happens. It's not an arrangement. There is nothing conclusive that happens in this discussion. It's more like me sharing my thoughts to the APA authorities and they sharing their thoughts. It used to, as I said, it's optional now. Earlier, what used to happen is for few complex cases, it used to happen even on no-name basis. In the sense, you don't have to reveal which company you represent or which company's transactions that we are talking. So we used to discuss with the authorities, and they used to give us in writing what they think about that case. Rollback years. Once pre-filing happens, then the rollback comes, but the APA application filing and the year comes. So APA can be applied for the 5 forward years and 4 rollback years. Now, if we go through the APA, that essentially means we are agreeing on transfer pricing certainty for 9 years, like 5 forward years and 4 years. Just imagine and compare this with the 13 years of litigation that we were talking about for each year. When to apply? If you intend to go for an APA, you have to apply it on or before the first financial year for which you intend to have this APA applied. For example, if you want your APA to start from say 25, 26 onwards, then you have to file it before 31st March 2025, right? So if you have a new transaction that is coming up, then you can file it just before you enter into that transaction. Time taken to an APA, we will come to that. It's not that rosy picture, unfortunately. It takes a good amount of time, especially for unilateral APAs, somewhere around 2 to 3 years, slightly more based on the recent annual report sent by the central government on the APAs. Bilateral APAs, as I said, is a little more complex. There are, literally 2 countries are involved and 4 parties in a sense. So therefore, it takes more time, 46 to 48. In fact, we see almost 4 to 5 years for APAs to get concluded. Now, a little bit on the process. How does APA works? And what kind of data one has to provide at each of the levels. But I'll pause here. Let's make it more interactive. If you have any questions, please feel free to stop me and ask any questions. I may not have all the answers, but whatever I could answer, I'll be happy to share. Any questions at this point in time? Sure. Yes. In terms of compliance or in terms of
compliance?
That's the unfortunate part.
Oh, okay.
That's the unfortunate part of APA. We will come to that.
Okay. You're going to cover next
Yes,
stage.
yes.
Okay, fine.
Okay. So in fact, what used to happen, I should mention this, that usually in advanced jurisdictions, what we have seen is pre-filing is kind of a discussion where the authorities really judge whether this is a fit case for APA, right? So what I mean by that is, if your case is complex, then they decide that, okay, this is a fit case for APA, because APA process involves time and effort, right? And it's not that cheap, honestly speaking, because we will come to that on the fees that you have to pay, but it's not that cheap. So therefore, they will evaluate usually whether the case is fit for an APA, whether it is worth investing that time and effort so that it's a win-win for both tax office and the tax payers. But in India, for whatever reason, there is no restriction as such. Even if you have 10 crore rupee revenue from a transaction, you can still go for an APA. There is no restriction as such. But in the other jurisdictions, they kind of filter out which APA to really look at, which APA not to really look at. So yeah, so on the pre-filing, as I said, it's optional where there are forms prescribed to file this pre-filing discussion where you basically have to provide what kind of APA that you intend to enter into and what is the nature of the transaction that you want to cover under the APA. We'll talk about critical assumptions as we come to the filing of APA application, but that's also something which you have to note down in your application and the history of any litigation, APA, MAP that was filed in the past, etc. Now, as I said, it's an informal discussion. You discuss, you get their thoughts. Earlier, they used to give it, actually document the entire discussion in a note and send it across to you so that you have it for reference. Today, one, it's optional. Even if you have that discussion, they are not going to document it and send it across to you. It's more like an informal chat. Now, assume that, yeah, usually what happens is, suppose you have to file the APA, say, by 31st March 2025. Somewhere in February, March, you have this kind of a pre-filing discussion, or maybe in January, just to get their thoughts. There is no timeline as such for the pre-filing. You can have it any point in time that you want, just to get their thoughts. Once you have decided that, okay, I'll go for an APA, then comes the serious business of preparing for an APA. Now, here there are forms prescribed, which is quite a detailed information that one has to provide. Now, in the form, you have to file, you have to provide the details of, which entities are going to be covered in the APA, whether this is a unilateral APA or a bilateral APA, and what we call in the transfer pricing parlance as FAR analysis, which is nothing but the analysis of functions, asset, risk. In simpler words, it's basically you are documenting what do we do, how do we do, and then what risk we are bearing in the process, right? So that we document in the APA application, and then we tell the critical assumptions. Now, the critical assumptions is something which plays a very crucial role in the APA. Note that APA is a forward-looking event, right? So unlike your CIT or a DRP or the mutual agreement procedure that I had mentioned earlier, all these are like a post-mortem. There is an event that had happened, and what you are trying to do is, okay, now let's resolve this event. APA is actually forward-looking, right? So you are basically looking at, okay, the next 5 years of the event that are going to happen, and then you are saying that, okay, let's agree on a transfer price today for the next 5 years, right? So obviously, in the process, you have to make certain assumptions like my business activity, for example, remains same for the next 5 years. Or there will not be any extraordinary event that I foresee in the next 5 years, or I follow the same accounting policy for the next 5 years. So there will be a whole host of assumptions that you write, on the basis of which, on the foundation of which the APA stands, right? So it's very critical that important that at the time of APA preparation, we spend time on what are these things that are essential for us to note down today and agree with the government of India so that we agree on this price and that holds for the next 5 years, right? So those are the critical assumptions. It will have bearing if something goes wrong. We will come to that. And then, yeah, you have to give a list of your litigations in the past as well in the APA application. And then you have to pay the price. So you have to pay a fee for entering into an APA. Now that's a major part. Now, so far what we would have seen is, fees payment of like 10,000 or 15,000, but here the fees range from 10 lakh to 20 lakh in an APA, depending on the quantum of transactions, right? So if it is 100, then 10 lakh, 100 to 220, more than 200, the total value of transactions, then it is, 20 lakh. And if you are applying for rollback, now rollback is basically, you have an APA, as I said, is forward looking for the next 5 years. The rollback is the same conclusion of APA I'll apply for the last 4 years, where I would have had litigation, I would have filed an appeal before the CIT appeal. So there, even if you have to file a rollback application, which is a separate application altogether, there you still have to pay a 5 lakh fee to the government of India. Mind you, tomorrow if you withdraw the APA for whatever reason, this amount will not be refunded to you or adjusted against your tax or anything. This is to the government of India's kitty, right? So as I said, so therefore APAs are quite money as well as resource intensive business. Why do companies enter into? As I said, 13 years versus 9 years of certainty that you get. What happens once I file the APA application, right? Of course, there are few nuances, like you have to file, if it is unilateral APA application, you file it with the principal CCIT office that's in Delhi. Not jurisdictionally, you file it with, say, Bangalore CCIT or anything. If it is a bilateral APA, you file it with the competent authorities office, again in Delhi, and then they will allocate it amongst the various APA offices spread across India. Now, what happens once the APA is filed? Usually, after say 6 months or 8 months, you will get a questionnaire. So, the APA goes to Delhi, as I said. It then gets allocated to regional offices of APAs. For example, we have a APA office in Bangalore. It has a commissioner, director, additional commissioner, and joint commissioner, etc. Good set of team where we go and meet and discuss the cases. So, all south cases usually gets allocated to the Bangalore office. It's a hub for the south. So the Bangalore office gets the APA application. They will go through your facts. They will note down the questions that they may have based on your application, and then they will send you a questionnaire. That's the first step on the APA. Of course, the questions usually used to be a lengthy one with a lot of information that they ask. Now, this happens usually around 6 to 8 months once you file the APA. They will give about a month or so to respond to those questionnaires. You go through the questions, you note down your answers, and you file it with the APA authorities. The APA authorities will then say that, okay, we have gone through your set of questions. We want to visit your site. What I mean by that is, for example, you have a manufacturing facility or say software company which is providing services. They will come to your premises. They will sit with you. They will sit with the management of the company. In a way, they will corroborate what you have said in the paper is actually what you are doing, right? So it's more like a fact-finding process that happens. Once they are convinced that, okay, whatever you have said, whatever you are doing is one and the same, and we are happy with what functions you are doing and how you are doing, what risk you are bearing, then they are going to propose a what you call as a APA agreement or the APA terms and conditions, right? So that's where the entering into of APA comes into picture. Now, in the APA agreement, essentially they will list down, okay, these are the transactions that you are having. These are the transfer price that you intend to follow. As I said, for example, just continuing with the examples that we were talking about, assume we started with 100. They will say that, I think you are performing a little bit more function than that you have mentioned. Let's agree on, say, 110, right? So they will then say that, okay, you pay 10 as an additional income, you disclose that, you pay taxes on that. If you are fine, you can enter into an agreement. You can say that, okay, I'm fine with these terms and conditions. Then you have to go to Delhi for sign-offs and all. What happens if it is a bilateral APA? Bilateral APA, as I said, is a slightly lengthy process. Until you file the APA application, more or less the process remains the same. But once if it is a bilateral, it goes to the competent authorities of India. So the competent authorities first see whether say with the US in this example, whether we have a necessary treaty to give effect to this APA arrangement, right? Because then it gets into a shape of a mutual agreement procedure where it's more like a treaty-driven discussion rather than a negotiation without any references. So they first, they will gather the data. You will receive same kind of information, questions from the competent authorities office, maybe channeled via our Bangalore office, and then you will respond to that. They will form a position paper, which is basically terms and conditions that they negotiate with their counterparts in the US government. You are not part of that conversation. You will be outside of that. They will negotiate the terms, and then they will come to you and say that, look, we have negotiated these terms and conditions. Your US government is happy with that. We are fine with that. Now you tell me whether you are okay with this. You have an option to either accept or again go ask them to go back and all, but you have an option in any case. So if you agree to that, then they will agree on these terms and conditions with the US government, and then they will enter into an agreement which is bilateral APA agreement with the taxpayer. That's how the whole process is. As I said, it depends on how many times the US government, Indian government meets, whether I'm okay with the terms and conditions, or how much time this entire discussion takes. So yeah, now coming to the, we'll just stick to the unilateral APA. Assume that we have agreed to the terms and conditions. The APA agreement typically consists of the transaction details that we have entered into, the transfer price that we have agreed with the government of India, and the critical assumptions that we have agreed with. It will also define what is the operating cost, what is the operating income, all the items which goes into determination of transfer price is usually also defined and discussed, documented in the agreement. Post compliance, APA compliance. Now we have filed, we have agreed on the APA, what happens after that? Now, if we have, as Sir was mentioning, the point with APA is, we will still have to continue with our compliance process during the part of APA, right? So not only that, whatever documentation I am preparing is also going to be audited by the tax officer during that period. Now it's like a double expense for the taxpayer. At one hand, he has to pay good amount of money to the government of India for processing this APA. At the same time, he has to go through this litigation process as well. Now, usually what happens, the practical thing that happens is, let the APA, let the litigation or the audit goes. Once the audit gets completed, we either lodge it with the tribunal or with the Commissioner Appeals, and we tell that, look, don't process this, we are in the APA, let us close that, we'll come back to you once that is sorted, so that we can come out of this litigation. So now that we have agreed on the APA, for all the completed years, now I have to revise my return of income, because I have filed it saying that 100 is the income. I have to revise it to say 110 is the income. So I file that. There is a timeline within which I have to file, and then there is also a report, APA compliance report, ACR, that you have to file within those the prescribed time limit of 90 days, where you list down that, okay, these are the transactions that are entered into, these are the transfer price that I followed, this is how I have met my critical assumptions, and please honor this APA agreement. So the transfer pricing officer looks at that ACR arrangement, and he kind of asks you to provide any more detail that he may need to confirm that the APA terms and conditions assumptions are followed properly. Then he will say that, okay, everything is fine, no need to really revisit this APA or to cancel this APA. If not, then there will be consequences which will come to. And then then you will get add on the modified the orders as well, saying that, okay, per APA this is the demand and you have paid that demand, and now let's close this litigation. So whatever litigation that you have had, once the APA concluded, that becomes kind of null and void, because you don't have to, you have already paid your taxes based on the agreement arrangement entered into with the government. So that you can then withdraw those cases and say that APA we have entered into, so there is nothing more required. Now, what if, as I said, APA is a forward-looking arrangement. What if I have some new transaction coming in during these 5 years? I can't foresee everything, right? So you can bring in that during the process of the APA, saying that, okay, I missed out, or this is a new transaction which I want to introduce or include in the APA agreement. That's possible. That's called modification of APA application. There are certain terms and conditions, because the new agreement that you are trying to bring in to the APA discussion has to be same as or not very different from what you have already discussed with the APA authorities, and it's at the discretion of the APA team whether to include that agreement, that new transaction or not. Revision of an APA. Revision can happen if suppose there are certain critical assumptions which they can accommodate even though there is some change, they can revise that APA terms and conditions. Cancellation, if suppose they found that what you have said to the APA authority is completely different from what you have done. So you, example, you have withheld some facts, you have not been honest with the APA authorities, then actually they can cancel this APA. This can happen even during the ACR audits. If during the ACR audits, if the TPO finds that, okay, you have not been adhering to the terms and conditions, he can actually recommend that, okay, you cancel this APA, right? So that can happen. But of course, you will be given an opportunity to discuss the case with them, and you have to tell why I did what I did. Now that's largely on the APA processes. Let me know if you have any questions so that we can discuss that. Yeah.
Let's say if I disagree. Okay,
Yeah.
as a taxpayer, I'm filing, but I disagree to the whatever the APA team talks about it. So then, what is the other alternative I have? How do I need to generally, practically, people will proceed?
Yeah, so this has happened not because of the disagreement with the government of India, but the things changed quite significantly, quite dramatically. So we filed an APA. This was for a residual royalty kind of a model. The company anticipated there to be profit. The company will earn profit for the next 5 years, and because of that, they said that okay, we will end up paying royalty to the counterparty. It so happened, and it happened during the COVID time. When everything went nosedive. So they didn't make any money, and they didn't expect to make money in the future during that period also. So then they withdrew the APA. Now, of course, the law, the APA term, the FAQ says that if you withdraw the APA, then whatever information that you have provided to them will be shared with the field officers. I have not seen that happening so far, and whatever withdrawal we have done before we got into discussions and details. But let's assume a case where you have reached a point of agreement, where I'm not happy with the agreement that has been entered into or that is proposed to me, right? So in those cases also you can come out of APA. But and that's a precise reason why the government of India is also saying that this is the reason why I want the compliance and litigation to continue in parallel.
Okay.
Because what will happen is, I mean, they could have circumvented this by saying that, okay, I'll, kind of period of limitation, I'll just exclude and I'll reopen these cases once the APA is withdrawn, but for whatever reason, they have not done that. So what they have done is let the APA continue. We will also continue the field audits and litigations. If suppose you withdraw, then we will anyway have a recourse here.
Correct. Will that be a disadvantage to the taxpayer? Let's say the two
I would
channels.
agree with that.
Correct, right? So basically, when I go to the appeal, already I lost a disagreement here. They will definitely take and then generally.
Yeah, I mean, see, while honestly speaking, there is as I said, in the FAQ it is mentioned that whatever information you have provided, because see, mind you that APA is a very it's not only resource and time intensive, it's fact intensive.
Correct.
The authorities will come to your site, you have to file a lot of information to them, there is a lot of revelation that you have to do to the authorities. Now the question is, what is it that I'm hiding from the authorities? I mean, it's a very, very, individualistic and specific question to each individual client in that sense. If suppose I have been honest to the authority, to the APA team, how is it that it's going to be any different if it is before the TPO or before the AO? Now, it's a different thing that we can say that, okay, AO may be prejudiced, they may be, revenue focused, etc., etc. But that is always there, that, if I provide more information, they may not, see, APA is more of a negotiation across the table,
correct,
right? It's more of a consultative process where you try to find a solution, correct, to a problem. But usually the audits are one-sided, where the intention is to collect as much revenue from the taxpayers as possible. Could go either ways, depends on how you present and your equations, etc. But I have not seen any APA office sharing the information that you have submitted with the tax office.
Tax authorities, okay.
I'm not seen that happening, but I must be honest also to say that we have also not withdrawn cases where we have reached to a stage of this one, because usually what happens, just imagine, you have spent good amount of years in the API process, you have spent good amount of time in the process, for the process, right? Consultants fee, government's fee, your own time cost. You don't want to then now after 5 years come back and say that no, I'm not happy with the case. You will engage with the APA team, you will try and kind of reason out why the transfer price that you have followed is the right transfer price, rather than saying that no, I don't agree now, I'll just walk out of the door. That usually does not happen. You will engage with them, you will consult with them. It's a repeat process. That's where it gets a bit tedious sometimes.
Okay, thank you.
And it's a good point. And that's a precise reason why the Government of India wants the litigation, the assessments to continue in parallel. While they could have done it much more efficiently is what I always feel, but for whatever reason it continues. While the picture is more tilted towards advantages, it's rightly so. There are good amount of disadvantages also for the APA. One, with the APA you can actually come out, as I said. If you're not happy or if something changes, you can come out of APA. Good thing is if APA is entered into, and that's the the attraction point for APA, that you have a certainty for 9 years, and that's a good amount of saving in terms of litigation cost, consultants cost, including, for example, you are looking at say some kind of an infusion of fund from someone. Then if you have an APA, that essentially gives a indication to the buyer that okay, your tax proceedings are pretty clean, right? Your valuation to that extent also increases. So those are the benefits, and the good thing is you can convert a unilateral APA into a bilateral APA also. What do I mean by that? Assume that the APA, the way the things are proceeding, you see that if the other party is also involved, probably we will have a better outcome, and which is the fact. Then you can actually say that okay, now I want to convert my APA into a bilateral APA and include my counterparties also in the process. What we have seen happening is with the unilateral APA, usually it's one-sided. You are talking to the Government of India, but if you bring in the other party, you have someone who kind of supports your argument at the government level as well in terms of US government, right? So therefore, usually you will have a better outcome is what we have seen, and that's where when this conversion was allowed, actually many companies changed their APA position from UAPA to BAPA, bilateral APA. Yeah, I mean it can reduce the litigation cost that you have to incur, gives you certainty and flexibility. APA is the best approach that you can follow if the issues are very complex. I mean, Lalit was talking about royalty agreement, the transactions that you are having, and or the intergroup services that we are talking about. More often than not, in the audit, intergroup services and royalties are disallowed. It's very difficult to justify these transactions is what I feel. The reason is, assume that in the case of royalty, how do you say that I have got benefited by this royalty payment, right? The fact that I am manufacturing something itself justifies that royalty payment, but that's a very, very simple argument for the tax department to accept, I suppose. So therefore, they will not agree to that. And intergroup services, it's very unique to multinational enterprises. You will not have any comparable for this. Assume you are paying a management fee. Have you ever seen this kind of transaction in a third party? I mean, for example, you are having a transaction with a third party. They will not tell you that, okay, these are all fine, I'll charge you another management fee. That doesn't happen with the third parties. So therefore, some of these transactions are very unique to, multinational enterprises, not to be found in the third party. So therefore, we will not have a comparison, and therefore it becomes difficult to justify the arm's length. So therefore, in those cases, APA, which is more like a consultative process, becomes helpful. Disadvantages, yeah, the compliance and the litigation assessment continues in parallel. If there is any change in the critical assumptions, then you will have to, the APA, whatever time and money that you have spent can go for toss. They will, if they cancel, then all gone. There is no fixed time frame. When I say that no fixed time frame, given the consultative process, it can take 4 years, 5 years, or it can get concluded in 1 year or 2 years as well. This is how the brief Indian APA team is. So we have the principal CCIT's office is primarily for unilateral APA, and competent authorities office is primarily for bilateral APA. So bilateral APAs largely gets processed at the competent authorities office itself, while they may take assistance of each of these zonal offices. And principal CCIT office, once he gets the application, depending on the region, they will send it across to the respective offices, and then that's how it gets processed. Some statistics here. How 2012, right? So almost 12 years since the APA got introduced. How India has fared in the last 12 years, right? So there are a good number of cases that got processed, that got filed in the APA office. So today, as of 2024, I think this is the latest circular that was, or the press note that was issued, where almost 1,851 cases that were filed before the APA office. Of that, around 641 cases got resolved. I think in terms of number of years, they say that 100 years of litigation, 500 years of litigation got resolved and all. If you should read that annual report of the CBDT, it's very interesting facts and figures you will find. So then yeah, so 23-24 was a bonanza year for the APA team. I think probably this is the first year or the second year or so where they achieved 100 plus disposals. In the sense, they disposed of 125 cases in 23-24, which is kind of never heard of even in the advanced jurisdictions. Now, in the bilateral, most of the time we have the bilateral arrangement with US, UK, Singapore, Japan. Though if you have the arrangement with those countries or the transactions with those countries, it's faster because the frequency of meeting between the authorities is much higher. Whereas with other countries, it takes time. What is the most used transfer pricing method? As you know, there are 5 + 1, 6 methods in transfer pricing. Sure.
Can we access this?
Yeah. So there is an annual report that is issued by APA office every year.
Okay.
So this is as of September 23, and in 24 actually government issued a press note saying that how much disposal they have made. It is publicly available.
No, what I mean is not the statistics. Let's say 641 has been concluded, right? Can I have access to what is that 641
that
provision?
You will not come to know. Because the APA agreement is between the taxpayer and the government of India. It's you will not, the other party will not come to know.
But if it's a bilateral, can't we have access?
No. Of the other party, of the other taxpayers, you will not come to know. So it's very, it's between the taxpayer and them. Right? So the other taxpayer will not come to know.
Understand between you and me, where I am coming from is masking that, because let's say you file for a unilateral APA, I have the same issue.
No, you will not.
No, I may have a same type of transaction I'm talking about.
Yeah.
So there can be same type of transaction, 2 unilaterals can be going to the government, or it's a repetition of one of the copy paste, or I'm looking at it. Rather, if you have accesses, other public can be utilize the same transactions.
No. In the sense, how do they utilize
Okay, let's say you're from Deloitte and Lalit was from the BDO, right? The business models for both your Deloitte and BDO is more or less same. Okay, I don't want to get into so detail, right? More or less same. And Deloitte has already filed a unilateral for one of the transaction for the transfer pricing. BDO also may have the same set of transactions in the same business models, right? So here, if I don't have an access, okay, Deloitte files a APA for a unilateral, and BDO also files for the same set of a transfer pricing, more or less nominal variance. Won't you think it's a duplication, and is any suggestions gone to the government to give access by masking the etc. of the parties?
Okay, the way this gets processed, assume that anyway we are, in the subsequent slides we are getting into GCC. Let's take a case of a software company, okay, COE, the Center of Excellence set up in Bangalore. Most of the COEs follow cost plus, right? So they follow a cost plus 15, cost plus 20%. you negotiate that unilateral APA with the government of India saying that, okay, what should be the cost plus. There is another COE of another company almost having the same set of activities, they are also negotiating that. The government will not tell you, because APA agreements are driven by confidentiality between the government of India and the taxpayer. They will not tell you that the other party also has filed and this is the agreement that we have entered into. That's not going to happen. What will happen is in the conversation, because see, once the APA draft position paper is prepared, you will be negotiating with the government of India. So you will be negotiating with the government of India, say they have moved from say cost plus 15 to say cost plus 20. So now you have to justify why I think cost plus 15 is the right number. So therefore you will be negotiating. They will say that, look, overall for this kind of facts, this is the number or this is the margin that we are concluding it, and these are the terms and conditions. So what you will come to know from the conversation, there will not be anything in writing. From the conversation you will know that broadly for the cost plus entities of these facts, this is the number which is getting agreed at the government of India level. They will not share with you that, they will not even deduct, or they will not even invite you on the same day of meeting when you go to Delhi. So for example, if I have to go to Delhi for signing of the agreement, I will be given a time slot. I have to be there on that time slot at that time on that day. And usually there will not be anyone during that period. Of course, when you are exiting, probably they will be entering, etc., etc. But usually there will be a bit of Chinese wall, so to say, if it is between you and that government of India on that agreement. You will come to know the broad terms and conditions, what is happening in the APA, negotiations of in general in the industry, but not the specifics. That you will not come to know. Yeah, so TNMM, the most used method, which is easier to apply, one-sided method. You just have to agree on the price. There is also a reason why TNMM is applied, which if you read these statistics with this slide, this gives you a more good picture of what is happening in the APAs, right? So as you know, TNMM is a one-sided method where you justify very, very simple basis. You justify what is the markup that an entity has earned from the transaction. Let's just continue with the software services that we were talking about, say the cost plus 10% or the 15% that we were talking about. That you justify saying that usually say in the Bangalore market or in the India market, whoever is providing similar services are also following a cost plus say 12 to 20%, and my margin is within that range, so therefore it is at arm's length. So therefore I am saying that TNMM. If you look at this chart, this is for unilateral, industry-wise how the APAs have concluded. Like 42, here it's about 40%, but what you have seen is 40 to 50% of cases, whether it is unilateral or the bilateral here. The cases that get solved are for information technology, R&D, software development, ITS, support services, back office, those kind of cases. And India, as you know, is a hub, is a service industry largely, which is contributing, which is growing. So most of the APAs that the entities will enter into with the government of India is on these ITS or the typical GCCs that we talk about, right, at a broader parlance. So therefore, TNMM becomes the norm most of the time that we are agreeing with the government of India. But does that mean the other methods are not really applied or not looked into? Other methods are also applied depending on the facts. What is interesting to note, and those who are have spent time on this particular method called profit split method, this is a very complex method, so to say, where you are literally splitting the profit of a group, across the jurisdictions. Let's just say, we will continue with the same example of software development. As a group, we have 20% profit, and each of the constituents of that group in India, in the US, in the UK, in Philippines, they're all contributing to that 20%, right? Now the question is, how about splitting this 20% across the jurisdictions based on the contribution made by each of them to that kitty, right? That's what, very, very high level, very simple terms, what is the PSM is. For this to happen, first you need to have access to the global books. For that you need to have a bilateral APA, because that's how you get access to the books. So therefore what we have seen is profit split method is something which is used when it is bilateral. Otherwise it's largely a single-sided or the one-sided methods that are used in the discussions. Largely on that, time taken, yeah, this is a pain point in the API. It has been. If you look at it, this is not a very rosy picture, where for unilateral it takes about 2 to 4 years, bilateral takes 3 to 5 years. It has its own reasons. The government of India has said in their annual report that bilaterals take more time because it depends on the number of meetings that we are having with the other party, the amount of discussion that we are having, which is not very frequent. So therefore it takes time. Somewhere it also on the taxpayers is what I feel, because we tend to take more time to respond to the questions of the APA office. I agree that it's a very lengthy question. Sometimes they send, but usually we take our own time to respond. What we have seen is if you respond faster, they can also come back to you faster, and the things can get closed in a very good time period of time. Now, I'll just pause here. Then we will now slowly transition into GCCs. But any questions on the discussions that we have had so far?
So any ballpark cost that will imply for filing an API and then closing, direct costs or like man hours required, any ballpark standards you guys have it internally?
Honestly speaking, it's all customized.
No, I get that, but let's say a fee of 10 lakhs, I'm just saying, throwing a number to the government you spend, or you spend a 1,000 man hours from start to end. Some ballpark, because when we get into this filing APIs, we need to have some numbers in my mind to make internal CBA. Do I really need to go for a API or not? Generally we'll have, right, organizations. Basis your experience, it's a throw a number.
Very difficult to answer,
just
but
a number.
I'll tell you how usually it happens. It depends on how much, let's take a very simple case of a cost plus, right? Let's start with that, because as the complexity increases, the entire thing goes up. So very simple cost plus, depending on who you hire and how you go about this, I think it's largely on that. So anywhere between, I think 30 to 40 plus 20, yeah, around 50 to 60 is what you are looking at, lakhs, not crores, but yeah. 50
to 60 lakhs for the fees and those stuff?
All the
okay,
all the
man
costs
hours.
that I'm...
Okay, let's say if a firm hires a
I'm not saying
Deloitte.
so, just a clarity. It's not Deloitte's fee.
Absolutely.
Just so that everyone is aware.
Off the
I'm
record.
just telling
let's say off the
ballpark
record.
what we have seen in the industry.
Okay, and if an entity hires a chartered accountant firm at a very high level for filing around 50 to 60 lakhs is the one get charged over a period of time.
It goes, and then
it can go to a couple of crores also.
That's
okay.
on that.
Thank you.
So, any other questions before we transition to GCCs? Fine. Quickly, as we were speaking, so far what we talked about is there is a controversy involved in transfer pricing, which is kind of unavoidable given the issue is so fact intensive, and there is a famous quote that transfer price is more of an art and not really a science. So it's more like, and I firmly believe that it's more like the story that you build on your transfer price. So therefore, there is no one answer in transfer price. So it's everyone's interpretation, right? A story can be interpreted in multiple ways. So therefore, I feel that that's what gives transfer pricing its essence, its beauty in a way, and that's what it makes more interesting day by day. Now, given that there is a controversy, there is a APA which kind of a ray of hope for the taxpayers, because they will know that if I go for APA, if I spend the time, effort, resource on this, there is a chance, there is a good chance that I'll have a certainty for the 9 years. It has its own nuances, which we talked about. We also discussed that what we have seen from the APA statistics is companies which are into IT, ITS, software, R&D, typical functions which can be housed in the GCCs are something which typically people go for a APA. Now, then how do we apply this whole thing into the GCC? We'll talk about that in a little more detail. Now, what you have seen is the GCCs. Bangalore is a hub, and it's expected to grow like in dramatic way in the coming days. What we have seen is typically when we say GCC, it will be kind of a center of excellence where the group houses its people here. When I say it's not its people, but it will hire people who will provide support services which may not be a core function of the team. For example, if there is a software development, say a company which is into a product development that is in the US, right? So mostly it will have a team here as COE which is providing a software development which then goes into the product that is getting developed in the US. More like a support function, because whatever activity that you do here is kind of monitored, supervised, guided by the group in the US. Or it can say that, okay, let's house some of our finance function, tax function, receivable, payable functions, payroll, etc. in the COE here, because it's not a core function, it's a support function. Let's have it in the India. Then some of the engineering activities can also come into this COE. So mostly it's a support function that happens. That's how we have envisaged. I mean, you would also have seen in the newspapers everyday articles saying that, for example, the other day I saw a survey company was setting up a GCC in India, and they have a big project. They have big ambition on the Bangalore GCC. So every company is setting up housing these functions. What are the typical issues or the way it is structured, right? So what we have seen is, one is very simple first model where there is a US entity, it sets up its own subsidiary in India, a COE, direct control. This model is followed when the type of function which is performed is, as I said, very routine, very support function in nature, and the group has direct control on that. So one-to-one correlation between the parties. We have also seen what we call as BOT model, or the build, operate, transfer model, where for a slightly complex functions where they hire or they enter into, the overseas entity enters into an agreement with the third party in the initial days, where they can get those services directly from there. Once at the same time there will be an Indian subsidiary which will also be set up. After a point in time, for the better control, those people will then move to that Indian subsidiary, right? So that you then move to the direct ownership model. Will take some time, but this is the BOT kind of a model that they operate. I have seen a couple of variations of this BOT model where there will be one agreement between the third party vendor and the Indian overseas entity for the services. The Indian entity kind of oversee that work for the part of time, and then they slowly take over the third party vendor employees into their role. So there are multiple variations, but for the simplicity's sake, let's just stick to it. What are the TP issues we have seen, or the transfer price that is followed in these kind of projects? One, most of the GCCs operate on a cost plus basis, right? So, and that's perhaps the reason why TNMM was considered as, as the best method in most of the cases. So, you basically determine that what is the GCC's cost, and then you add all those costs, and then you apply a particular markup on that, okay? So, when you are setting up a GCC, the first question that one should ask is, how should I compensate the GCC for the activity it is performing, right? So, what are the costs that I should take into account in this process? Now, the typical costs that are considered are the employee cost, the facility cost, and then the depreciation cost and insurance cost. Whatever the direct and indirect costs that you have will be considered, and the top up of say 15 or 20% added to that and charged. So that is on the method. Now the intricacies, the nuances come in. In the cost, what should be the cost base? Like, how about the pre-operative expenses that I would have incurred? In the sense, I would have incurred certain cost, but I have not started rendering the services to the group, right? Then in such instances, how I should operate? Now, there are multiple ways in which one can look at this issue. Assume a situation where it's between two third parties, where you have a third party who you have hired to provide services exclusively to you, right? the moment the third party says that I have some pre-operative expenses, can I charge it to you because I have set this operation for you, will you agree to that arrangement, right? So usually no. I mean, I will be happy to pay for the services or pay the fees for which, I have received the services. If there is no service, why would I pay that? So therefore, one argument is, pre-operative expenses is the headache of the GCC. I'm not going to bear that expense. So I'm going to pay from the day I start receiving the services for the cost that they have incurred for those services. That is one. Second argument is, but I have set this operation specifically for you. I don't have any other alternate, right? So all this setup is for you. So if not with the markup, at least you should pay me that cost so that I am not at a disadvantage, right? So mostly we tilt towards the second position on saying that the GCC is set up specifically for the group. So whatever cost that I incur is for the head office or for the US entity, and therefore whatever cost, even if it is pre-operative, if not with the markup, at least with the cost should be reimbursed. So that is one. Second, there will be issues which pertains to the reimbursement of expenses, mostly in the case of this Indian vendor. Assume a situation where, as I was saying, for the convenience sake, the Indian vendor may be paid by the Indian entity back to the Indian vendor, and the fee will be, so the amount that will be charged by the Indian entity to US entity for the supervision work that they have done, whether the fees of the third party vendor should also be included or not, right? So whether the cost base should include not only its cost, but also the cost of the third party, which has nothing to do with this arrangement, right? Now, there are judicial precedents which said that when you supervise a particular entity's work, you are actually performing those work, and therefore when you charge a cost back to the group, you should also include the third party cost and bundle it and then charge a markup on that. I have seen which I think is more sensible, because if I'm overseeing a work, then I'm taking a responsibility for that work, then ideally I should charge it along with the cost for which I have taken responsibility for. I have seen instances where some of the taxpayers have taken a position that, look, I am not responsible for their work, and I can clearly demonstrate that I'm not really looking at their work, I'm not really supervising their work. So their work is passed through, so I'll just pay it to them and have it reimbursed from the group, and whatever my cost I have incurred, that I get on a markup. Litigative, you need to demonstrate that I have nothing to do with that work, I have not supervised that work, and it's more administrative convenience. Helpful when you get the amount in advance from the group, because usually in such arrangement what happens is you are actually bearing the working capital risk. By paying say 100 crore to them for their activity, you are losing that much of cash. Say the group entity is paying after 6 months or 3 months, you are basically funding the group for that 3 months period, right? So therefore I have seen instances where this getting litigated, and TPOs usually saying that you are bearing actually the working capital risk, we can't agree to this kind of funding of the group, and you should ideally consider everything and charge it. Also another issue that we have seen happening when especially the third party vendor involved in the BOT model is what happens for the business transfer that happens after say 3 years. Whether that's an international transaction or a transfer price should apply or not. For example, there is an agreement between overseas entity and Indian vendor, third party vendor for the services. After 3 years, we have an agreement to say that your employees will move to my subsidiary in India, and then the Indian subsidiary will continue to render that services to the group. What happens for the business or the employees transfer or the business transfer that happens from Indian vendor to the third party vendor to the Indian subsidiary, right? So those who are who practice transfer pricing are aware of this nuance called deemed international transaction, which says that even if you are having an arrangement with a third party, technically it should not be a transfer price should not apply, because international transactions are the transactions which attract transfer pricing provisions, and of course there is a STT. But assume a situation where both the entities are in India, and there is this arrangement where Indian vendor renders the services to the, or the businesses get transferred to the Indian subsidiary on account of the master arrangement, the master agreement that is entered between the US entity or the overseas entity and the third party vendor. It could be termed as a deemed international transaction. So what it means is you have to demonstrate that the fees or the amount that I have paid for that acquisition also meet the arm's length criteria. So this is very critical because we tend to ignore that, okay, it's a local transaction between two entities who are unrelated, so why should transfer price at all apply? But transfer price can apply in those instances as well. So that in those cases, I think we should be mindful of that. The third cost that we have seen is the ESOP related expenses. And that's the usual mode of compensating the entities for ESOPs, right? Multiple things can happen in the ESOPs. One, when the group can incur the expense for the ESOPs, but they may not charge it to the Indian entity, right? So they may be giving the ESOPs to the Indian employees of the Indian subsidiary. They may not be charging that cost to the Indian entity. So that is one scenario. Now what happens in this scenario? Till now, we used to take a position that no cost has hit us, and therefore we don't have to consider that in the cost base. Of late, what is happening is the ESOP cost, in a way, it's actually an employee cost. Of course, parked in the US or parked outside India, right? So therefore, the authorities are insisting that you should consider that in your cost base and charge a markup. Otherwise, what will happen is, in a way, it's called a cost base erosion. The cost base on which you are charging a markup itself shrunk, then that itself is not a right transfer price, right? So that is one issue. When the ESOP is charged, it's very simple. You have to anyway consider it in the cost base and charge. Third situation is very peculiar, and we have few live cases there where ESOP is not charged, but because of Ind AS, you have accounted it in your books of accounts. You have not really, you have hit the P&L, but you have not got any charge or anything from your counterparty in the overseas, right? And you have not claimed any deduction for that in the return of income. Now, it's very interesting. In one of the case, it happened in in one of our clients' case where the ESOP was accounted under Ind AS, but not really got charged. The TPO looked at it. TPO didn't consider because anyway you have not claimed any deduction and it's not charged. The assessment got concluded. The 263 proceedings started after that, and then they started looking at, okay, what are the issue? The commissioner said that, okay, you have not considered the right cost base, and that's a cost base erosion that I was talking about. So then they said that, okay, you should consider that cost, and they reopened the case. They started a revision proceedings for that. The matter went to the ITAT. The ITAT said that, look, if it is not charged to India, and if you have also not claimed any deduction for that, that need not be included in the cost base and charging a markup on that, right? So they have categorically told that you should not consider the ESOP cost as an operating item. Multiple other views are also possible, but can be a contentious issue. We should be mindful of this, especially in the case of GCCs, of these ESOPs. Now, of course, with the GCC price setting up, there are multiple issues that are coming up, right? So how GCCs are then trying to solve this? There are two ways usually the GCCs look at solving some of these problems. One is the safe harbor, which essentially the government says that, look, if you have a transaction which are in this nature, then this is the transfer price that you should follow. That is called safe harbor, right? For example, for software development, if your turnover is in particular range, I think 100 crores or so, then it says 17%, if not then 18%, up to 200 crore. So there is a rule which says for each of the transactions what should be the margin. Most of the companies in the initial stages of the operations, I have seen tilting more towards safe harbor and saying that, okay, our business is not that big, it's 100 crores still. So let's agree on the 17% markup, and there is a definition of cost also provided in safe harbor, which they apply, and then they get a certainty on that price. The good thing about safe harbor is if you have followed the rule of the safe harbor, then your audit will get completed in like 6 months time or so, and you don't have to wait for another 2.5 years or so in the normal course, which otherwise in the normal course you would have incurred. So then there is a APA. Now before we get into a APA, let me just pause here and spend some time on this interesting circular that was issued earlier, and which kind of has a bearing on how the whole value chain of the GCC can be relooked at, right? So we started our conversation with on the premise that GCCs are in the initial stages of operation. They will start with support functions for the group, right? So it's more like something which is supervised, guided, monitored by the group, and it's not really a core function. But there are multiple news articles that come up, maybe a marketing articles of the individual entities, which say that, especially these kind of things, which say that GCCs are moving up the value chain. There are articles which say that 25% of our R&D actually happens in India. Product development happens in India. There are so many patents that originates from India, right? So there are so many products that we have developed in India, right? So how does this impact on one of the oldest circular which was issued about 10 years back by the Government of India on Circular 6? The Circular 6 essentially started when people started applying TNMM method and called themselves as a contract R&D services providers. What Government of India said is, if we have to follow a cost plus method, in other words a TNMM method, then you need to meet certain criteria, right? So there they said that first you have to be an entity which provides services under the supervision monitoring of the overseas entity, and you should not be bearing any risk, the business risk you should not be bearing. You should not perform any critical value adding functions. When I say value adding functions, if you look at the software development part, okay, the whole value chain, there is a concept, there is an architecture, then there is a development testing, and eventual releases that happen. The conceptualization architecture usually are considered in a way as performed by someone who are in the role of, for the simplicity's sake, let's say who are in the PhDs or upper in the skill sets. Developments, by any means I'm not downgrading any of the qualification, but the way I'm saying the value chain is looked at by the tax authorities, right? So then there is a function which is considered as low end of the functions, which is like testing or a coding, routine coding, and those kind of things. So what they said is, if you are not performing any of these significant functions, you should not perform any of these significant functions. You should not be, your work should be monitored by them. You should not be owning any intangibles. You should not be owning any, bearing any risk of the business, etc. Then they said you can continue to follow a TNMM method. Cost plus can be used, and you can call yourself as a contract service provider. On one hand, you have that kind of a guidance from the government saying that these are the functions that one should perform to say that this is TNMM. On the other hand, it's very natural that the business will grow. The GCCs will go up in the value chain. They start providing key functions. How do we then solve this issue? Because the fundamental thing is, in this situation, probably the TNMM that we are following and the cost plus that we are following itself may fail. That itself may not be a right transfer price. So maybe this is again details of that. So what we have seen is, as I said, from the safe harbor, usually the companies tilt towards an APA eventually to say that now that we are not performing the same function that we used to perform, say 5 years back or 8 years back, we have moved up our value chain. Let's get a certainty on this transfer price from the authorities via the APA mechanism, right? So that's where the APA becomes a key arrangement or the option for the taxpayers, where they can agree, they can open their books, they can say that, okay, these are the activities we are performing, and let's agree on the price. What we have seen in such APAs multiple things. One, the authorities, we have seen asking for a slightly higher markup than what you have started with. We have also seen instances where they have actually segregated their business into two parts. One, where you are providing critical R&D functions, where you are performing very routine function, agree a separate markup for these two. I have also seen a blended markup kind of a situation where they said, okay, very difficult to segregate, but let's agree on a blended rate at a particular price, right? So that we have seen. Free of cost software tools and services, because any business will get this kind of free services, free tools from the group. In the APA, what we have seen is they are including those tools, services cost, even though it is not charged on a notional basis for the purpose of markup in the cost base. In the sense, what happens is you will not recover the cost, you will only get the markup added to that through the APA mechanism. Similar with the ESOPs also. Of course, you have to have a separate segmental. If you are performing, say, engineering, design, IT, ES kind of a work and software kind of a work, you can't club everything and say that I'll go for APA. You have to have a particular EDS as a separate vertical, IT as a separate vertical, ITS as a separate vertical. Segmentation becomes crucial. And with segmentation, how do you allocate cost becomes crucial. I think this, in a way, kind of connects with what Lalit, in a way, was saying, that the receivables that you have can be recharacterized as a loan if it is overdue for beyond the terms agreed between the parties, right? So that is also one of the aspect which is looked into APA, and we have seen instances where in the negotiation we have said that we will receive the money in advance, then the APA also has agreed to reduce the markup by, say, 0.5% or 0.3%, etc. So some of these can be discussed, negotiated, and the complexity as it moves up, the APA becomes more relevant in getting more certainty in the GCC sector. So that's largely my presentation on how APA and GCCs are looked at from the tax perspective. We still have time, and a good amount of 15 minutes we have. Anyone has any questions, we can deliberate, discuss, or else we get some time for lunch so that I'm not in the middle of lunch and you. So please feel free to ask questions. Sure. So, so in the transfer pricing provision, so let's say that you have a transaction, right? What Transfer Pricing Act says is that the transaction that you are having should be demonstrated as at arm's length. Now, what is arm's length? In very, very simple terms, the price at which, terms and conditions and the price at which you are transacting with a group entity should be something which reflects of an arrangement between two third parties. That is what transfer price is. There is of course, if I get into technicals, there is a difference between fair market and the arm's length in a way. Yeah, but anyway, let's just stick to the concepts of it. Now, how do you demonstrate that the price that I have transacted is compared to the third parties is at arm's length, at arm's length, right? So they have prescribed some 5+1 other method in the act. The most used method is transactional net margin method. Now, as the name suggests, it basically looks at your net profit to say that whether the profit that you have earned from a transaction is something which you would have otherwise earned had you transacted with a third party. Let's just say company A and company B are related parties, and you also have company C, which is not a related party. Okay? You are transacting with company A and you are earning 10% profit in that. You are also transacting with company C, which is a third party, and if you are earning 10% there, then your price that you have earned is transacted, compared, and it's at arm's length. But if suppose the price that you are transacting is 10, whereas from the third party, that is with C, if you are earning 30% or so, then the question comes why this is 10. Of course, there are multiple reasons we can reason out. Transactional net margin method, in a very simple terms, looks at this net profit that you have earned after considering all the cost, which unlike other method which either looks at gross profit or price itself, net margin method looks at the cost, sorry, the net profit that is earned. Transactional net margin method, TNMM, it is called. We have a young chartered accountant there, the budding one. Yeah. Sorry, which one?
Suppose in the first initial 3 years, so there is agreement between US entity and Indian entity. So for administrative and marketing services, so can I have applied safe harbor rules and taken as a 15% margin, cost plus method. So in the from 4th year onwards, I am not providing any services to US entity. Just I am importing machinery and I am selling to Indian customers as an Indian entity. So then also safe harbor should be applied?
No, no, no. So the safe harbor and just to clarify, for marketing support services, unfortunately safe harbor is not there. So it's primarily for IT ATS, but let's for
Any
the example
other
take,
IT
let's take
enabled
that.
also you can take.
Let's example for the example sake, let's take that. Safe harbor rules is applicable between you, for a transaction between you and the group entity. If you are having a transaction with a third party, by definition safe harbor does not apply. And you can, it's driven by market force, right? So you can choose whatever price you want to sell it at to that group entity, to the third party. And you don't have to follow, say, cost plus 17 or whatever prescribed in the safe harbor. See, safe harbor is a method which is, or a scheme which is there for what we call as SMEs, or the small and medium enterprises whose turnover is like within that 200, 100 crore. Because see, transfer price to maintain compliance, documentation, and of course now there are 3 documentation one has to maintain: master file, TP documentation, CBCR, etc., etc. But it's elaborate process, right? So it's a simple mechanism where you can say that, look, I don't want to go through these hassles. I'll just follow what is mentioned in the safe harbor because I'm an eligible entity. I have an eligible transaction. I just want to follow what is mentioned there, say 17%. Once that is done, your compliance burden and the audit burden reduces. It's a simple mechanism for small enterprises so that they don't have to go through these hassles of compliance and litigation, or to reduce that in a way.
First 2 years I have applied safe harbor. Then 3rd year I can choose
You can
documentation
choose,
and
absolutely yes, absolutely yes. You
it
can
should
choose.
go through agreement.
The way usually you do is, say in the first year, you know that, okay, it's a very simple transaction, I want to follow the safe harbor. In the agreement you mention, you can use the same definition which is provided in the safe harbor, and for the simplicity's sake, and say that 17% I'll apply, assume. Now you know that, okay, I have moved up the value chain. Then you obviously know that, my transaction itself is not an eligible transaction for safe harbor. Second, you know that you will probably need higher markup, or I need to recalibrate my markups, right? So therefore, you change the agreement, and then you agree into terms and conditions which suits to your business, and then you can follow different, nobody is going to come back and ask you, why didn't you follow safe harbor? That's not going to happen. So that is very clear. Sure. Any more questions? Or we can probably wrap it
So
up.
if safe harbor is there, no documentation is required per se.
I mean, that's a good point. The law is slightly silent on that. But what we have seen people doing is, while they maintain see, the documentation is largely benchmark, right? So what we have seen people doing is they just follow or mention that I have followed the safe harbor. That's it.
As
The
a
problem
TP auditor,
comes-
it will be safer side.
Huh?
If I follow safe harbor,
Huh.
so
No,
the client
problem
doesn't
comes-
follow the documentation, nothing.
Yeah.
Yes, I will put a comment and close that.
We have seen that happening, but there is one downside to it. I have not got an answer to this so far, which is, assume that you have gone for a safe harbor and the safe harbor application is rejected. Then your fallback is TP documentation, because then you have to go through the regular audit, right? So I have seen people
Approval
doing
is
both.
required for safe harbor?
No. The TPO can reject your application also.
No, I am not applying.
Uh,
Not through APA. In the general sense, in the TPA I'll mention following safe harbor.
huh.
And as a TPA editor, we are commenting it.
Yeah.
Not through APA or something,
No,
general
safe,
sense.
safe harbor only. I mean, in the documentation you just mentioned that I have followed the safe harbor markup of 17%, let's say, okay. And you file the application. The TPO will go through the application. If he accepts, then it's all well and good. In the sense, the 17% markup that you have followed, and the application is then accepted, right? So assume that your transaction is actually not a eligible transaction. In the sense, you are actually providing little more services than typical software services. And the TPO comes to know that during the audit. And the application that you have filed for safe harbor gets rejected. The law says in that case, the recourse under the regular provision applies. That essentially means you will have to go through the regular audit. For the regular audit, in the TP documentation, you have to justify the 17% with a comparable benchmark, right? So that is not there today. So then the question is, and the law is silent on that. Law has not said that because you have applied safe harbor, you don't have to maintain documentation. It's a practical view that is taken to say that, okay, if I'm applying safe harbor, why should I do a benchmark? But law is not saying that. So I have interpreted that. Now it's rejected. I don't have a benchmark. The validity of the compliance itself is questioned, right? Then
It is silent, I can take a view on that.
Yeah, I have not seen that happening. I have not seen so far, at least in my cases, I can say, and in general, where the safe harbor is filed and it gets rejected. I have not seen that happening. So I don't have any answer what if it happens, but I know that this legal question can come if suppose it gets rejected. Best view is it depends eventually on how do you want to play this. One, since the law has not said, as a secondary analysis, I also have a benchmark with the report. Because if something goes wrong, I have a benchmark to justify in the regular audit, right? Now, if I just mention safe harbor rate, whether it is feasible to do, of course, if the intention of safe harbor is to reduce compliance burden, then that's the best thing that one can do, right? So that's a very practical view on that.
Okay.
Sure. Any more questions or just wrap it? Okay. I think we are done. Thank you. Thank you for patience, listening, and for participating in the conversation. Thank you.
Thank you, Umesh, for deliberating on the advanced pricing agreements. May I request CP Jain, Managing Committee Member of Bangalore branch, to present a memento to CA Umesh. Guys, we have lunch arranged outside. After the lunch, we will start the next session at 2:15.